Hey, good morning, investors. I'm Stuart Kruse, and welcome to KAM's Chart of the Day. Today, we're going to do a little look back. On September 17th, I suggested that Lululemon was getting a little expensive and that maybe it's time to take some money off the table. So how did that recommendation play out? Well, up on the charts from our friends from My Charts, we have a price chart of Lululemon. Let's take a look at the original price chart. It's up to 345. So over about a month's period, it's up 10%. Now, 10% is pretty awesome return. So it looks like it's probably bad advice to have sold Lululemon when I suggested, which was back around the 17th. But if you look at the retail sector, which is the best performing sector in the ETF or in the S&P 500 right now. It's ahead of technology. It's been kind of back and forth with home builders, but retail has the best momentum right now. The entire sector itself is up 9.3% relative to the S&P, which is up 5%. So as they say, a rising tide lift all boats, and so Lululemon was lifted with the retail sector. But I would still argue that maybe not sell it, but perhaps should have traded out of something. For example, some boring stock like Gap, which has almost no sex appeal to it, like Lululemon has some sex appeal and has a cultish following. If you're looking at Gap stores, Gap actually outperformed Lululemon by almost 2-1, and definitely the retail sector by 2-1. It's up 18% in that month. And furthermore, if we're really going to look at why I have suggested to perhaps move out of some of these names or move out of Lululemon, it's because of, let's switch this to the price to sales ratio. It's just expensive. Lululemon itself, its price to sales is trading at, let's take off the price. Lululemon's price to sales is trading at 11, where the Gap's is trading at a half. That means for every dollar of sales, you're basically paying a half a dollar, as if the Gap is more or less going away. Normally, institutions or companies that are relatively solid and stable have a price to sales of around 2. Under 2 is cheap. You start getting over 4, that's pretty expensive. As you see, Lululemon is over 11. These are big numbers. So I think in the long run, if you were to trade Gap out for Lululemon, that might be better. We also mentioned in our Momentum Wednesday Overstock, which is the best stock in the retail sector. So the retail sector that's lifting all boats, even Overstock's, which is a high flyer, is price to sales is only 1.7 versus Lulu's, which is at 11. So, considerably higher. And again, if we're going to look at the price chart between Overstock and Lulu, and let's go to a normalized so we can see the returns. Here we have Overstock is actually up 26% during this time. So you have a less expensive stock trading at a better momentum and in a sector that's doing well. So while Lululemon, if you'd stayed in, you made 10%, that's pretty awesome and you can't complain about it. There were definitely cheaper and alternative trades you could have made that would have made a lot more money, and I would suggest going forward, these may also make more money. So this is Stuart Kruse with Kruse Asset Management, reminding you and always suggesting that you should invest and trade with the odds in your favor.